All right, guys, today we're going to talk about a strategy trading the Emini futures, and actually this strategy can also be used for stocks or forex or commodities. It's about how to see structure in the chart. A lot of people look at charts and they can't make heads or tails out of them. They can't see any order in them, and it's very important to have clarity. So that's what I'm going to help you today by using certain moving averages. So there's 4 moving averages I put on all my charts. This black one here, that is a 15 exponential moving average. Then the red one is a 50 period simple moving average. The yellow one is a 100 simple moving average. And then this purple one is a 200 period simple moving average. Those are the 4 that I put on my charts. Now, they serve different purposes. Number 1 is support resistance. And number 2, we look for how they align with each other and interact with price. So, for example, here, as you can see, in this area, really all through here, the price is kind of stuck in the moving averages. In fact, the first thing to notice is all 4 moving averages are very close together. So basically, what that literally means is price hasn't really done much for the last 15 bars, 50 bars, 100 bars, 200 bars, and therefore we call that a consolidation time. And it is a very similar dynamic to Bollinger Band squeezes, if you've heard of Bollinger Band squeezes, where it's a low volatility time. And that actually is a wonderful thing to look for a trade, because there are cycles in the market, many different types of cycles. One of the types of cycles, I think when most people think of cycles, they probably think of just up-down cycles like that. Sorry, my artistry is non-existent. And they would see these as cycle high, cycle low, cycle high, cycle low. And that is true. That is one type of cycle and a very important one. But another type of cycle is expansion-contraction cycles. And those can be played very well for trading. Can make a lot of money doing that. And what we look for is a contraction cycle. A lot of people do this wrong. They will scan markets, looking for high volatility markets, thinking, oh, I want to be in a high volatility market because that means the market's moving a lot and I can make a lot of money because it's covering a big range in a short period of time. The problem with that strategy is that by the time that shows up on your scan, there's enough data for that to actually be calculated and show up on your scan. Quite often, you're going to be coming to the end of a high volatility period. And then it's going to go into a low volatility period. That's the expansion contraction cycles. So the better thing to do is actually scan for low volatility patterns. And again, Bollinger Band squeezes are great, but here's another thing you can look for, and that is simply these 4 moving averages all clustering together like that. And then we look for a breakout, and you can do it different ways. You can use your favorite indicator, use whatever you enjoy doing. One simple way would be to look for a breakout of that high. And notice how the moving averages now start pulling apart. And of course, then the market just takes off. One last thing that I'll show you on this particular video, let's move forward here. And when we get a trend reversal, okay, here's another way you can see structure. By the way, this is called a stacked moving average pattern, where you have the 200 at the bottom, 100 above it, 50 above it, and the 15. And that's generally considered a trending type of structure when that happens. Now, the other thing, though, is the 15 EMA I really like. Some people use a 20, that's fine. Again, the exact number you use isn't going to make a huge amount of difference, but just from trading for literally decades now, I like this one. And so what I look for is that's the first line of demarcation where things are expected to change. So that is what happens right here. Price goes below the 15 EMA, and then notice what happens. It stays below that 15 EMA all the way down. So then it crosses the 15, the 100, and even the 200. But it's this 15 EMA, as I said before, they provide support resistance as well. And that's what I look for, and it works out beautifully. So Putting these 4 moving averages on your chart can start to give you some structure, a visual structure to price patterns, and be very helpful. Oh, look at that. We've got a new release for a NinjaTrader. That's great. Well, I'm going to go download that now, but while I'm doing that, I hope you liked this video, and if you did, please click the like button below and leave a comment telling me what you'd like me to cover in future videos. I'm very responsive to that. We're kind of forming a community here, and I love that. Also, I'm giving away one of my courses called How to Trade Like the Pros, and this is my newest course. And you can get that course absolutely free by simply clicking on the image in the top left corner, or if you're on a mobile device, that won't work. Just click on the little eye with a circle around it in the top right corner of this video, and that'll give you access to the course if you're on a mobile device. And by the way, once you do that, I'll personally send you an email with the first video in the course to you.